Hello everyone. Today we are going to look at investing opportunities in the cannabis sector. I will share with you why I'm so bullish about this area of investment, and then we will dive deep into one of the best cannabis companies out there, Trulieve. This is the first video of a series of videos on the cannabis sector, so subscribe if you would like to hear more, and don't forget to click the thumbs up button if you get value out of this video. Cannabis is still illegal in most of the world, with the blue countries having it fully legalized and the green countries having it legalized for medical use only. As we can clearly see, the total addressable market for cannabis is kept artificially low by regulations. As more and more countries will ease up the grip and will follow more progressive countries like Canada, US, South Africa, we should expect the market to become bigger and bigger, benefiting cannabis companies. And there are many more drivers behind the sector. Besides countries opening up in the future, there is the fact that there are several banking issues in the sector. In the US, cannabis companies today cannot access traditional banking services such as low interest and loans and so on. And this forces many companies in the sector to rely fully on cash for expansion. This slows down dramatically the ability of these businesses to expand and profit from the cannabis demand. However, there is a proposal called Safe Banking Act that is being discussed in the US Parliament that would effectively remove these constraints. It's just a matter of time, and sooner or later it will pass, and cannabis companies will have the cheap capital to expand at an even faster pace than what they are doing now. Then there are all other type of regulatory uncertainties that keep many investors away from putting money in the sector today. There are still social stigmas with the use of cannabis containing the demand, and there are today inefficiencies with the fact that in the US, cannabis is legal at the state level but not at the federal level, and this forces businesses to produce, transport, and sell the product within a state, and therefore limit the economy of scale that shipping products across the country would allow. But perhaps the biggest law keeping profits of cannabis companies artificially low is Section 280E. This law states that businesses selling cannabis and other federally illegal substances cannot detract any expense in their operation of the business. And this leads to an insane effective tax rate in the range of 70% even, which can be triple as compared to non-cannabis businesses. This means that as long as cannabis is federally legal in the US, cannabis businesses need to pay an insane high effective tax rate. So, as more and more states decriminalize cannabis, legalization of cannabis at the federal level becomes a closer reality. And when that happens, cannabis businesses will see their profits benefiting dramatically. When I think about all these drivers we just talked about, I see this sector as being put artificially under pressure. The demand for cannabis products is gigantic, and as these regulatory inefficiencies will work out over time, I think that they will unlock a massive potential for cannabis businesses. So the way I look at it is that if I am patient and have a long-term approach, investing in this industry could bring some amazing investment returns that few industries could promise. Forecasts say that the cannabis market will expand significantly, both in the US, which is the blue bars, but also in the rest of the world, which is the yellow bars, effectively more than doubling between 2020 and 2024. And between adult use, which is also called recreational use and depicted in yellow, and medical use, which is in blue, recreational use is expected to grow at an even faster pace. If we look at the biggest market, which is US, about a third of the states in dark green have fully legalized cannabis. Another third in light green have legalized it but for medical use only, and a third of the states still consider it illegal. So there is already a big market in the US and is expected to grow more and more as more states open up. So the question here is, how do we profit from this industry and this growing market? I like to use this funneling approach that I have discussed into the how to build a portfolio video linked in the description below if you're interested. First, I identify the area of investment, which in this case is cannabis, and then I screen businesses by their performance in terms of past growth and growth predicted in the future. And then the ones that meet these criteria, I look at if they have a moat, the financials, and the management. Following this approach, I start screening cannabis companies that fit those criteria one by one. I learned a lot in the process and I started taking notes of what I liked and what I didn't like in the companies themselves and the cannabis business in general. First of all, I have never seen so many buzzwords in company presentations. I'm not going to list it here, but perhaps I will do a funny video in the future with all the nonsense I read. Nevertheless, leaving that aside, I think that a major issue for investing in this sector is to identify moats for the individual businesses. Is there going to be a Coca-Cola type of business when you can differentiate from the competitors? Coca-Cola is the first thing pop in your mind when you think of soda, and then there is all the others look alike. Is there going to be something similar for the cannabis sector? Because, for example, when I was looking at the cultivation side of the business, I couldn't identify competitive edges between one company and the next. Maybe one business had a bit cheaper production, but that's mainly it. It looks like none of these companies is doing any type of breeding, so they don't have their own proprietary cultivars. They use cultivars from third parties. But if you know otherwise, please let me know in the comment section below. I would very much appreciate it. It looks like some companies might have some IP on the extraction and manufacturing process, so there could be an advantage, but the information is very vague. Again, please let me know down in the comments if you have insights about it. Where I see the biggest moat is the reach that these businesses have to the consumers, essentially their dispensary network, because by owning the shops, they can push forward their own brands and products. And by owning beautiful dispensaries, they can also help branding of the products to be more exclusive and therefore having a pricing power. For this reason, as I was screening through the cannabis companies, I kept an eye open especially for the businesses with a strong dispensary reach. And the dispensaries look very different. From pharmacies looking like to something that looks more like a museum to something that looks like a cafe. I'm very impressed by the design that some of these shops have. As I was screening through the companies, I kept the following as an important selection criteria: reach to the customers with a widespread dispensary network, beautiful dispensaries giving customers a feeling of premium shopping experience, and premium products. Moreover, I wanted the companies to have a main focus in the US market and having low valuations in terms of price to sale ratio. It was shown in fact that if we compare the price to sale ratio of Canadian cannabis companies in blue with the US counterparts in red, we can see that US companies are much cheaper. On top of that, we can see on the right graph in red that far greatest revenues from the cannabis sector are expected to come from the US. Finally, strong growth, past and projected, is a must for me to invest in the sector. So I started narrowing the list, comparing the companies I found most interesting by their price to sale ratio valuation, whether or not they are already profitable, their recent revenue growth, and whether or not they have net cash on their balance sheet. It was a very interesting exercise. We can see how extremely different some companies are valued, and very few are already profitable, although it makes sense since most of them are fully focused on growth. The revenue growth of most of them is absolutely astonishing, and that many of them are doing surprisingly good in terms of cash on their balance sheet. Based on these values, I selected a few that I wanted to dig deep into. Today, I will do a deep dive into Trulieve, and I'm planning to make a series of videos on the cannabis sectors where I analyze also the others. Trulieve is a company that many investors in the cannabis space are interested in. It is the third largest cannabis company in the world by revenue, after Tilray and Curaleaf, with a revenue of about 600 million Canadian dollars. It is a US focused company with a strong footprint in the southeast of the US, especially Florida, where it totally dominates and holds about 50% of the medical cannabis market share. Trulieve dispensaries are very pretty in my opinion, with a clean and professional pharmacy-style design. In these dispensaries, it sells a lot of different products, and in fact, it has more than 550 SKUs. It has 89 stores in total, and as of today, 2.2 million square foot of cultivation facilities. It is very focused on profitability, and in fact, it has been profitable since 2018, which is rare for companies in this space. The financials also look great. The revenue and earnings growth is staggering, symbolizing a business in full expansion. It is profitable, and about 7.5% of their revenues hit the bottom line. It does, however, have a bit of debt, which nets about 2 years of yearly net income. The valuation for such a fast-growing company is very attractive, with a forward PE ratio which is quite cheap at 22. Also, the operating margins are quite high to 41%, which is very nice to see. Overall, we have a fast-growing company in a booming industry, a company that is already profitable and it is valued at a fair price. A good mixture for a possible investment. When we look at the revenue and earning growth over the years, we can see that they are increasing at a staggering pace, reflecting a business in full expansion mode. And because of tailwinds in the cannabis sector as a whole are so strong, I do not think that this massive growth is stopping anytime soon. In relation to this, Trulieve has been acquiring a few companies to expand their reach outside of Florida. Dispensaries in Pennsylvania, cultivation and extraction facilities in Pennsylvania, dispensaries in Connecticut, in California, growth facilities in West Virginia, dispensaries in West Virginia, and finally the elephant in the room, which is the ongoing acquisition of Harvest Health. The acquisition will lead to Trulieve being the largest retail and cultivation footprint across the US, and this acquisition will also lead to a combined 2021 estimated consensus revenues of 1.2 billion, essentially doubling the revenue of Trulieve today and increasing the total addressable market by 53%. The combined businesses will allow Trulieve to achieve a footprint in 11 states, have 126 dispensaries, more than 3 million square foot of cultivation and production facilities, 22 cultivation and production facilities, and more than 15 cannabis brands in their portfolio. I think this is going to be huge to create growth, and hopefully the management will also be able to create synergies. Looking at the footprint of Harvest Health today, we can see that this acquisition will allow Trulieve to reach the West Coast markets, the Northeast, and even a stronger reach in Florida. I think this move will allow Trulieve to totally dominate the East Coast of the US. The stock went parabolic in the last year, 5xing in price, and since then it has had a 33% correction approximately. It is still high as compared to a year ago, but the fundamentals of the business are getting stronger than ever. So I expect a lot of volatility from this stock. I think it is wise entering in small chunks if you're interested. And in the short term, I wouldn't be surprised if it either crashed much lower or went to another parabolic run. In conclusion, I think that cannabis as a whole is a very attractive sector to invest due to its growth and increasing addressable market. I expect a lot of volatility due to the upcoming regulations, and I am optimistic because I think that they will go in the right direction for the industry. Trulieve is a solid cannabis company in my opinion, with a huge expansion potential and a disciplined management team. My personal prediction is that it will print double and triple digit growth for a few years to come. I also think that Trulieve is relatively safer than its competitors due to its profitability and cheap valuations. That's it for today. I hope you got value out of this video, and if you did, please click the like button and subscribe for more videos on the cannabis sector and investing in general. Before we go, I must remind you that I'm not a financial advisor and this content is not financial advice. It's just my view and is meant for entertainment only. Please do your own due diligence before investing in any instrument. Have a great day.